Let's go! As you have probably already heard me say in recent videos, everything is looking extremely promising for decentralized finance to see huge inflows of users coming in due to the events with Robinhood and GameStop and all of that good stuff you've already heard me talk about in recent videos. Some evidence of DeFi's recent growth surge is that since the start of the year, the total value locked in DeFi protocols has increased about 90% from $15.7 billion to just below $30 billion, and that could just be the beginning. If growth continued at the same rate, that would put the total value locked in DeFi at $686 billion halfway through 2021 and about $30 trillion by the end of the year. Listen to that. 30 trillion US dollars, insane. While reaching $30 trillion by the end of the year is not very probable, to be honest, it is very likely that DeFi protocols continue to see strong growth. That is exciting simply because it is a big step towards global crypto adoption, but it is even more exciting for crypto investors, especially crypto investors who invest in DeFi projects, which we are talking about a lot on this channel. However, there is one question that many DeFi investors have been asking themselves recently, and that is, which DeFi projects will the crowds of newer crypto users decide to use? After all, there are new decentralized exchanges, yield farming platforms, lending protocols, and a bunch of other DeFi-centered projects being created all the time. While there's a very large field of options to choose from, it is actually not too difficult to narrow them down to select a few that people new to crypto will choose to utilize. One of those projects is Compound.finance, and in today's video, I will explain how I came to this conclusion, as well as go over what services Compound offers and why the project has so much potential for growth among new crypto users. Okay, let's kick it off with a brief overview of the history of Compound. Unlike a lot of DeFi projects, Compound has actually been in development since all the way back in 2018 when the first round of funding produced $8.2 million. In 2019, another $25 million were raised. Some notable investors included Bain Capital Ventures and Paradigm Capital, one of the co-founders of Coinbase. Right away, having a history of reputable investors and a long period of development separates Compound from the majority of the other DeFi projects. That is very important because when new users enter any environment, especially those where money is involved, they tend to gravitate towards the name brand offerings. Compound definitely fits that description, seeing as it has been around as long as pretty much any other DeFi projects. So if we look at DeFi Pulse, then we can see that it is the third largest by total value locked, with $3.6 billion locked in it. Seeing that other people have already entrusted Compound with billions of dollars will likely give newer users more confidence in the platform. The next reason why I believe new DeFi users will flock to Compound is because of its simple and intuitive user interface. Decentralized finance has gained a reputation of being extremely complex and difficult to use, even though that is not always the case. Regardless, newer users will be looking for something simple and easy to understand, and Compound is exactly that. This is the Compound homepage. Immediately, users are greeted by some statistics about how much money is being put to work on the platform, which works to instill that trust I mentioned before. Scrolling down reveals a simple explanation of what exactly Compound does, calling itself an algorithmic autonomous interest rate protocol built for developers to unlock a universe of open financial applications. As we continue down, we can see a variety of well-known platforms that have integrated Compound into their services. These platforms include Coinbase Custody, Anchorage, Binance, OKX, Ledger, Exodus, and many, many more. Next, we see a list of audits that have been performed by highly reputable audit firms, which should once again instill trust for new users. Finally, at the very bottom is a list of investors such as Coinbase and those already mentioned. Of course, Coinbase already a well-known name for anyone who get involved in crypto. Everything on this homepage works together to show that Compound is safe, and this is essential to convince new users to start putting their money into the protocol. Now, let's take a look at the actual application that users utilize to interact with the Compound protocol. As I mentioned earlier, it is laid out in a very simple and easy to understand format. On the left is everything to do with earning interest, and on the right is everything to do with borrowing money. When you connect a wallet, all of your balances are shown here, and the available APY for each asset is shown in this column. The same goes for the lending side of things. The majority of new users will likely be more interested in earning interest rather than borrowing crypto, so I will focus on that now. While some of the APYs are relatively low, such as those for Ethereum, Wrapped Bitcoin, and Uni, the rates that really matters are those for stablecoins, and as you can see, those range from about 7.5% to almost 9%. These rates being available for USD equivalents be one of the most attractive features to people making the transition from traditional finance to DeFi. Imagine that, taking your USD from your bank account and start to earn interest in a decentralized way on Compound. Beautiful. In 2020, the average yield on a savings account on a traditional bank was only 0.05%. So for reference, a rate of 8% is 160 times higher than that. That is already a massive improvement, but the rates shown here are actually lower than what users actually receive. That is because anyone who supplies money to Compound also is rewarded in comp tokens. Those extra comp tokens can boost the APY by an extra 4% to 4.7% depending on which stablecoin is deposited. For USDC, that means the actual APY is about 13.7%. For the other stablecoins, it is slightly lower, but is still exponentially better than the normal savings account. This is why protocols such as Compound truly are the future of finance. I mean, we're essentially doing it on a smart contract, cutting out the middlemen who are going to take the cut in the traditional market. So the actual process of depositing and withdrawing coins from Compound is as simple as everything else on the platform. The very first time a user deposits a token, they will need to approve its use, and after that, all it takes is entering an amount and selecting supply or withdraw. For anyone who have supplied, money on Uniswap in any liquidity pool, you are already familiar with how this kind of works. So let's look at the comp token itself, because no matter how good a project is, if it does not have solid tokenomics, then the coin may not ever perform well in terms of price. However, that is not the case with Compound. So far, a bit more than 4.25 million out of 10 million comp tokens are circulating. 10 million is a very reasonable supply for a large project such as Compound. One of the most attractive aspects of Comp is that a large portion of the supply is distributed as rewards to users of the platform. Frequently, those users just take the Comp and restake it to earn even more yield. This means that the effective circulating supply is even lower than the number listed here, because a lot of it is locked up in staking. The current price of about $352 gives Compound a market cap of $1.5 billion. While $1.5 billion is a lot of money, the value does not even put Comp inside of the top 30 cryptos, meaning that there's a lot of room for Comp to increase in price, and that is what I expect to happen as more and more people begin the transition from traditional finance to DeFi. Even a 10x from the current price would only put Comp in the number 6 spot on the list of most valuable cryptocurrencies, and for a project so appealing to newcomers, that is not an unreasonable position. And also take into account that we expect the overall crypto market to do very well, so the 6th position right now is probably not going to be the same value as the 6th position in a couple of years. So when taking into account the fact that as Compound grows in value, a lot of other DeFi projects will as well, it looks even more likely that Compound could at least 10x as DeFi adoption continues to accelerate. I hope that you enjoyed today's video and learned something new about Compound. Let me know what you think about the project down in the comment section. And also, if you enjoy me bringing these DeFi projects to you, breaking them down, let me know that also. And if you want me to do more of those videos, subscribe right now and I will see you in the next video.